Good morning. This is Larry McMillan with a market update on Monday, November 2nd, before the market opens. The big item, of course, is the election tomorrow, and that's going to certainly affect volatility, uh, perhaps in a good way. We don't really know. But let's go through the indicators anyway. S&P fell every day last week and closed all the gaps that had been left on the way up. So the chart is struggling to remain positive. There's support at 3,200. If that is broken, by my definition of bear market, we're in a bear market. In other words, we have lower highs and lower lows on the SPX chart. I don't go by those, percentages that they use on TV. So that's a very important level, 3,200. We kind of bounced off 3,230 on Friday, and the market is up overnight as we head into the election, probably just some short covering, but we'll have to see. The next indicator we look at is the put call ratios, and those are now bearish again. They've turned upwards. Put buying has finally started to expand, and that forces the ratios upwards. And as long as they are rising, they'll remain on sell signals. Breadth also deteriorated pretty badly last week, and both of our breadth oscillators are on sell signals. They are reaching oversold territory, though, so if we had a couple of days of positive breadth, they could roll back over to buy signals. But right now, they're on sells. Also, new lows have finally crept ahead of new highs with a little bit of fervor, not a lot, but that's generating a sell signal from that indicator too. So as you can see, just about everything's on a sell signal. So that leaves volatility. VIX itself has risen above its 200-day moving average and has probed up above 41 or 40 towards 41 the last 3 days. But it actually closed below there and gave us a short-term VIX spike peak buy signal. So that's a positive indicator, although while it has a good track record, it kind of could be trying to swim upstream against too many other factors here right now. If the 20-day moving average of VIX were to cross above the 200-day, that would be quite negative. And both those moving averages are still rising. They're about 1.5 apart right now. The construct of volatility derivatives, meaning the shape of the futures term structure, is also negative in that November is the most expensive month. All the futures are trading at discounts. All the VIX futures are trading at discounts to VIX, and the term structure slopes downward. So that's a pretty bearish combination. It's echoed by the CBOE volatility term structure, which also slopes downwards. The one small ray of hope here is that the CBOE volatility index term structure, when it flattens, that's a buy signal. So we look at VIX and then the 3-month VIX, which is VIX 3M. So right now, VIX is above VIX 3M. If it crosses below that, that would be a short-term buy signal. So we're heading into the election with a lot of negative factors in terms of the market. But as we've always said, S&P, SPX chart is the most important indicator. And right now that's trying to cling to some sense of at least trading range, if not bullishness. So it won't turn bearish unless that 3,200 level is violated. So I invite you to visit our website, optionstrategist.com. Take a look around. Our newsletters are doing quite well right now. We have some new short-term indicators like McMillan volatility bands, where we email you short-term signals every day. And also take a look at our Saturday webinars. We have one coming up on intermarket spread trading. That'll be here later in November. So thanks for watching and have a great week trading.